Morning, everyone. We're going in a second. I think I've messed up the Q&A box. I don't think you can. Let me see. Can someone just pop a question in the Q&A box? See if I can get it. Does it allow you to do it? Yay. Okay, fine. Right. Well, welcome, everybody, and thank you for joining me on this workshop, how to put your life cover and sick pay on expenses. Appreciate you taking the time out for this. What's my aim for the workshop? Well, before I tell you my aim, I'd love to know if you can use for the most of the presentation, if you use the chat option, if you pop in the chat what you'd like to actually get from this, that'd be great. And then any questions we'll do at the end of Q&A. So put in there. What I'm trying to do, I'm just going to provide as much information and guidance as I can. I'm not going to go too deep into any subject. I'm going to keep it really simple. Hold me to account and let me know if I haven't done that or if you need anything explaining. Like I mentioned, there will be a Q&A at the end if anyone's got any questions. So make some notes throughout. Pop your questions in the Q&A box, not the chat, as we go along, please. Quick session overview. We'll look at why we need cover, why we need insurance in the first place, why it's really important. Also, why it's really important not to leave it till later. Why you need to do something about it now. And then I guess the whole title of the webinar, of the workshop, is how we can use our businesses, if you've got one, particularly if you've got a limited company, and how you can actually make some tax savings in doing so. So who am I? I'm Raj Bogan. I help and advise limited company owners with tax-efficient ways of setting up their life insurance and what I call your sick pay cover. I'll explain what I mean by that as we go along. Some are a lot of the challenges that you all face as business owners. I get because I'm a business owner myself, and I go through similar challenges. I've had the struggles in business, including the sleepless nights that you have, that you may have. And I became a financial advisor. I've been doing this for like over a decade or so, and I've learned so much in this industry, including these couple of ways in which you can put your personal cover on expenses. Most people aren't aware of this, and many in the industry don't want you to know. So I'm here today to help you learn the secrets that they don't want you to know. Quick but very important disclaimer, nothing that here is any advice, or I'm not telling anybody to take out any policies based on this workshop. It's purely for information. And I'm not an accountant or tax advisor. So anything I mentioned about tax, please make your, speak to your accountant and double check it all. But please make sure you do speak to me at the end, because I can help you, set these products up if you want them. And they can't be arranged without an advisor. And the consequences of getting it wrong, most importantly, can be very serious. And I'll explain how you can set a meeting up at the end. So why on earth do we need cover in the first place? Well, we love and care for our families, don't we? And we want to be responsible and not put not just our families, but ourselves and our families at risk or danger financially. Why on earth would you purposely leave your loved ones in financial limbo? Well, you wouldn't do that on purpose, would you? But it's usually for one of a few reasons. Either we didn't make any time for it, or as I say, we didn't really prioritize it. Maybe it just gives us a headache and it feels too complicated, so we just avoid it completely. Or we think we don't think it's needed. And in most of those cases, we just don't seem to have connected the dots in our mind, and we can't seem to see the picture. And I think that's down to something called optimism bias a lot of the time. I will come on to that in a few slides' time. And I think also because we haven't taken, or maybe we've not had that much time off work, and we always see ourselves as fine, and we're just going to get up the next day and everything will be fine again. And that's the kind of the picture in mind that we see. Other thing I wanted to think back to is think about COVID and how for so many people their income just stopped. If it wasn't for the furlough scheme for a lot of people, that, for particular employees, that it saved so many. Think of the sick pay that I'm going to go on to think of that insurance as the furlough scheme. In terms of life insurance, or as I call it, death insurance, because it doesn't actually benefit you. You're taking it out for somebody else. So, for example, if you're single with no dependents, no kids, then you don't actually need life cover. I suppose the only exception to that is if maybe you've got some business life cover, maybe you've got business partners who will be affected if you died, or maybe the business is larger than just you, there's actual staff there. And like I said, the business will be affected on your death. Otherwise, life cover is to help those loved ones financially. What I want for you all is to for all of us is to make ourselves financially resilient and build a fortress around us so to ideally weather any storm. The main reason we all go to work, we go to work to earn an income, don't we? Well, today I want to show you ways that you can ring fence that income regardless of what happens to you. Another reason, for cover is we don't want to be kicked out of our home. We don't want the bailiff to come in and repossess us. Another reason, particularly coming back to business again, we've all worked so hard to build our business in the first place. Surely it makes sense that the business itself can withstand financial challenges and storms. I'm going to touch on more of that near the end and how the business can protect itself. But I just wanted to leave you with one key point on this subject. If the business stops trading and it's the main source of income, of your income and wealth, then what would happen next? Let's have a think about that. Now, bearing in mind what I've just said above or previously, I want to give you a scenario. Let's say you become unable to work because of, let's say, some kind of an illness, maybe a cancer. After a while, the business runs out of money and it can't pay its bills, and that's including paying you. The business, unfortunately, has to stop trading and it goes bust. As the business was your source of income, now you personally start to struggle and you can't pay your own bills, including your mortgage. You struggle to put food on the table. Obviously, it depends on your situation and what you've got as a backup, perhaps in savings. But this is all while you're suffering from this illness. So the stress is now actually making your illness worse. And unfortunately, before long, the bailiffs have come round and they've taken you home as the bank have now unfortunately repossessed you. Also, going forward, it's very unlikely now that you'd be able to be a business owner, a director going forward for quite a while, which means that you're probably going to have to go work for someone else, which is not what you really want and not why you set your business up in the first place. Now, I don't really want to go into, I can keep going on with this story, but as you can imagine, it's just going to get worse and worse, and it's a disaster on every level, isn't it? And none of us want to go down that road. There's no point to it. There's no good that comes from it. So instead of that, let me paint you a slightly different picture. Let's say you're smart enough to take some cover. You became seriously ill and you were off for what I call medium to long term, months or maybe years. You insured your income so it continues now to come in, and you could pay yourself personally, meaning there's no bailiffs, no worries, no stress. And you can actually take the time necessary to improve your health, which is the main thing, of course. Also, though, the business can continue to trade or be in existence, and you'll have something to come back to when you recover because you also took some cover for the business itself. That's a big difference in outcomes, isn't it? And my question to you is, well, why would you take the risk? Speaking of risks, what are the actual chances of something horrible happening to us? We don't want to think about it, but we know it can. Here's some statistics. This is what you call a risk report. I've done one on the left-hand side. It's actually myself, and my wife, Rena, has very kindly agreed to use her details. As you can see from the pictures, it gives a percent at the top part, which is the grey part, gives a percentage chance of death. The middle part, what is that, orange, gives a percentage chance of suffering what we call a critical or a serious illness. Cancer, think of cancer as the most common one. And the last one, the purple, is talking about what is the odds of us being off work for 2 months. Now, this is between, so I'm 40, my wife's nearly 40, between now 40 and the age 70, okay? Now, we all know death is certain, but obviously we just don't know when. Now, you can see from this that there's a much bigger chance you'll get seriously ill or be off work for at least 2 months than death. Now, just to be clear, the 2 months off means that at any one time and not the total amount taken off between now and 70. Now, my question to you all is, do you know someone who has had cancer, for example? Please pop it in the chat if you do. I've had 2 out of my 4 grandparents, one still alive, have died from cancer, unfortunately. And do you know someone who has died of a similar age to yourself? For myself, I had a cousin who was 50, GP, died early this year, and I had a cousin last year who was 38, 39 at the time, and she dropped dead as well. Still don't even know why. Again, if you're willing to pop in the chat, if you know someone similar to yourself. Do you also know someone who's been off work long term? And again, like I said before, long term means months and into the years. I wouldn't say it's kind of like a couple of weeks or so. My brother, about 10 years ago, when he's only 22, 23, got something called lupus. He's still not really he kind of recovered now, but at the time he nearly died. He's in intensive care. And he was off work for a year or 2. So the type of policy that replaces that lost income if you're off is something called income protection, or as I call it, private sick pay. Just so you know, the average claim length on one of those, if someone does go to a claim, is 8 years. Now, could you survive without an income for 8 years? Because I know I couldn't. I wish I could. Some more statistics here. Cancer cases, unfortunately, are just heading, you see that pink line, they're heading in one direction. The other two lines just represent, if you can see it, male and female. They're projected to increase to over 500,000 by the year 2040, and we're currently at 380,000 now. 1 in 2 of us will get cancer at some point, which is an incredibly scary stat. Yes, it says there that the survival has doubled since the 70s, which is great. So in actual fact, if you're thinking, well, I've got life insurance, this will just cover that. Well, it won't, because you haven't died, so they won't pay anything out. I mentioned before about optimism bias. I'm just going to read, you see that from the images there, and I'll touch on that, but I'm just going to read out the actual definition of this. The tendency to overestimate the likelihood of positive outcomes and downplay the possibility of negative ones is called optimism bias. While an optimistic viewpoint can be helpful in motivating people to take chances and pursue their dreams, a dose of realism about the risks involved can make success more likely. I mean, how true is that? I mean, the image on the right is so accurate, isn't it? Because in pursuing a goal, you're much more likely to achieve it, I think, if you realize the road ahead is going to be difficult and challenging, just like the image there with that shark, so that your mind is prepared for anything and that you're actually more willing to fight. Because so many times we get excited about things and we see the picture at the top where it's just a straight road, everything's easy. And we get so excited about the goal, and then kind of reality hits and we weren't expecting it. And then we can end up giving up because reality didn't seem to match our expectations. I guess the message I'm trying to get across today is to be prepared and not let your optimism bias or your expectations sabotage your future and leave yourself, your family, and your business at risk financially. Look, maybe you're thinking, Raj, what are you on about? I've got cover. Why do you keep waiting on? And maybe you have. That's great. But the other thing with what I find with nearly everyone who has cover is they're not reviewing it on a regular basis. So get it reviewed and make sure it's still fit for purpose. And then make sure you review it on a regular basis. Clients of mine, we sit down and review things. To me, regular review means on an annual basis. Just even if it's a check-in, quick, nothing's changed. It's really important. So moving forward, what are the most common mistakes people make? I'll go through them, but put your hand up again if you want to, if you're brave enough to put in the chat if anyone's made some of these already. Christine, yeah, you've done a DIY, have you? Right, okay, fair enough. Paul, yeah, you've not reviewed it in 8 years. Wow, okay. Well, that maybe you definitely want to probably look at that then. So going through these then. So as you can see, not having any cover at all, I think is a massive mistake. It depends on your situation, but most people will need something. Trying to do it yourself, not getting any advice, what I call the DIYers, not getting professional advice. I'll give you an example of this, how it can, easily go belly up. I had a meeting with a young couple a few years back, and I explained the different options available to them, and I've given them a recommendation. They went away to digest it, and they came back to a second meeting, and they said they found a much cheaper option online. And they told me that, I can't remember the exact prices, but they told me, I was like, that doesn't make any sense to me. I said, can I have a look? They said, yeah, of course. And I looked into it, and the reason it was cheaper, because there were different parts to this cover. It wasn't just one policy, it was 2 or 3. One part of the policy, they'd missed a zero off. I think it was something like £130,000 of cover, and on this other part, they'd put 13,000. And I mean, that should be, anyone should probably spot that. But as an advisor, I knew straight away from the price something wasn't right. Can you imagine at the point you make a claim expecting 130,000 and you get 13? That you don't want to be in that position. Another one, I've already said it, is once people have got the cover, this is massive actually, this is probably just as much as people not having it. Once you've got the cover, and a lot of advisors can be blamed for this, to be honest with you, is not reviewing it on a regular basis. There's absolutely no point, or very little point, setting it up, even if you do it correctly in the first place, if you're taking the advice and then not reviewing it regularly, because your circumstances will probably change, whether that's your income, whether that's you've had kids, whether you've moved home, whether if it's like business cover, there's change in the business. You need to be reviewing this, I think, every year. Ideally, sat down with your advisor and not, and like I said before, not taking the right advice, not reviewing it could mean that you end up short on claim, or it just means that you're wasting money on stuff that's not fit for purpose anymore. Another mistake people are not aware of is that you can put your life insurance into something called a trust. What the hell is a trust? Simple explanation is it means three things: that the right amount of money goes to the right people who you want it to go to, and at the right time. Right money means that there's no inheritance tax to pay, because a trust sits out what you call outside of your estate. It's not owned by you, so that means the government can't tax you for inheritance tax. The right people means you can select who you want it to go to, and the right time means in the UK there's something called probate, which can take 6 to 9 months or longer. And there's a delay in getting the money. With a trust, it comes straight to your family, to the beneficiary, or whoever it may be, maybe a business partner, so they can access the money straight away. So that's really important. And what does a trust cost? Absolutely nothing. You're thinking, I've got life insurance policies already. Oh no, what do I have to do? Well, you can actually put existing ones into trust. It's a form filling exercise. There's no cost to that. If you need help, get in touch with me. I'll help you. No cost. The next one is having a personal policy. We can actually have a business one. That's part of the reason of this workshop today, to explain how that works. Is it really a mistake? Not really, if you're not aware of it. But like I said, I'm going to come on to that in the third section, explain that in more detail. And I think one of the worst things, one of the saddening things to see from my side of the fence, is people who are working really hard, but unfortunately, they know they need this cover, or they know they need to review it, but they're not making time to sort it out. And then you become too ill to work. And because you've not sorted it out, you've now got no actual cover to fall back on, which is an absolute crying shame. I don't want anyone to be in that position. So why should we do something now? Why not just, leave it? Because you might be thinking, yeah, I see your point, Raj, but, and I think I probably do need to do something. I've got some cover. I probably need to review it. I've got nothing in place. I'll get to it later, when I've got some time. I've got these other important tasks to do. I'll just tell you what the risks you are facing by leaving it till later, and you can make your own mind up. If something happens to you, then you may not be able to get cover again. You may get something called exclusions. It may be postponed till later, pending any investigations or tests that have to be done. So what are exclusions? Exclusions mean they'll exclude certain what you call pre-existing conditions. Example, say you had some mental health history. It might have been depression. You might have taken some time off work. You may be on medication. Well, these things, this will typically be excluding off any of the what you call income protection claim. They'll just exclude mental health. Now, if you haven't had any mental health, or maybe it's something else, maybe your heart, or you've had cancer. If there's nothing wrong with you now, then, or whatever situation you're in now, if you go ahead and do it now, then you're not going to be risking having an exclusion, because it'll all be covered. That's a picture of me in the hospital last year. I'm going to give my own situation, how suddenly things can occur. So last December, I went to A&E with a light pressure on my chest. Not what I call pains, but it felt weird for probably, say, a couple of weeks. Just like at night time, I felt it every now and again. I thought it was really odd. And then it kept going, and I felt, I was worried it might be my heart. But anyway, long story short, it turns out I had a tiny blood clot in my lung, which, as you're probably aware, if you leave that untreated, it can be absolutely fatal. I mentioned the cousin earlier, who died at 50 earlier this year. He died from a blood clot in his lung. Now, look, I'm not trying to be arrogant or anything. I'm not saying I'm a super athlete, anything like that. But I would say I look after myself. I run 4 or 5 times a week. I go to gym a couple of times a week as well. I'm exercising pretty much every day. I eat well. I don't smoke. I hardly ever drink. And also, I've never had any medical issues. So it'd be easy for me to think, I'll be fine. Nothing's going to happen to me. But it did. So they said, look, we want you to go on blood thinners for 3 months. And after that, they're going to review it. And then after they reviewed it, by the time the appointment, it wasn't 3 months, it was 6, 7 months later. They said, I don't know why they told you 3 months. It should have been, for life. We want you on life, for life now. Why? Because they said they've no idea what actually caused it. They can't figure it out. They said you're male, which is higher risk than female. I'm 40 years old, and that's, the class that is young, which I like. And also family history. My dad, my uncle, and both my brothers have had clots at one point or another in either their lungs or their legs. Now, look, I've already got cover, naturally, because I do this, but it's also, like I said, important to review it annually, and I haven't been able to do that from last December until just recently. Plus, on the other side of it, the insurers said, look, until you've had 6 months from obviously last December, until it's been clear, then we're not even going to touch it. And like I said, I've only just been discharged a couple of months ago. Now, I'm lucky that I can now go back and I can review it and I can increase cover or make changes if I want to. Although, having said that, some insurers won't give me what you call standard rates anymore. The prices are different. Now, imagine just my condition was only slightly worse and that I didn't have any cover in the first place, so my existing cover was no good. I've not been reviewing it in a long time. You know, I may not be able to get cover again, or it would potentially cost me a fortune. I was lucky. If this can happen to me, my point is, if this can happen to me out of the blue, then who's to say it can't happen to you or someone else that you know or you love? Another reason to do something about it now, on average, premiums go up 15% per year. So every year it's going to cost you more if you leave it and leave it and leave it. And equally, you're just increasing the risk of something happening anyway. Also, sod's law, isn't it? It's the one thing, or one of the things that you don't do something about. It's the thing that's probably just going to happen just when you don't need it to. And like I said before, you're constantly just increasing the risk because you're getting older. And like I said, you know, it's just statistically, it's more likely. I mean, no one here wants to pay more, do we? It's just, who on earth, why on earth would you want to do that? Right, so just moving on. So I'm just going to give it a little, I said I won't go into too technical depth, but I'm just going to give it, and I've kind of mentioned a lot of stuff already, but what types of cover are out there? I think most people have heard of life insurance, if I call it on their death insurance, because that's what it actually covers. It just doesn't sound as nice, but that's the truth. And I mentioned there a few times about income protection is the industry name, but as I call it there, private sick pay or private permanent sick pay, which is what it is. Because it pays you a regular income if you can't work because of any sickness or accident or disability that's made you, kept you off work, you're unable to do your specific job. I think it's an amazing policy, and you can make multiple claims on it throughout the life of the policy, and they'll never raise your premiums like a car insurance because you made a claim. And in my opinion, it's the most important insurance of all because it ring fences and protects the very thing that we go out to work for, which is an income. And of course, it pays for all. If you've got other insurances, how are you going to pay for all those other insurances without an income? Then the last one is critical or serious illness, which is the jargon we use in the industry. I've called it cancer cover. What it does, it covers certain conditions, whether it be illnesses and some accidents, and it pays out usually just once. Normally there's a lump sum if any of these conditions or events happen. And I put cancer cover because the most common claim in the industry is cancer, and it actually accounts for about 2/3 of all claims. There are most common ones are things like heart attack, stroke, MS. There are actually dozens of different conditions that you cover. It's not just these 4 or 5 by most insurers. Just so you know, not a horrible thing to think about, but just so you know, the 5th most common claim is actually children's claims. Children's have a serious illness. Just so you know, you can actually insure your children as a small and cheap add-on to your own policy, which, if you've got kids, I would strongly recommend. So I just want to give you a case example. It's how I helped Jeff and his family, how I helped him protect his family and his business. So Jeff came to see me after seeing one of my videos that I do online, and as he didn't realize he could put his family life insurance through his business. He had some existing cover, but he hadn't reviewed it in years. Shock horror, like I said, it happens all the time. So what I did for Jeff and his family was get, first of all, the right amount of cover that he needed, but also for the right term. And we were able to put some of it through his business so it was tax efficient. What was the actual result of it? What does that even mean? So what it means is when Jeff dies, his wife can now pay off the mortgage, which is great. But also, and this is what he didn't have any of this before, there's now sufficient money for the family to live off because Jeff's not going to be there to provide an income. It was the only breadwinner, which is incredibly important. You have to remember, of course, that it's an income that is lost when someone dies or they can't work. Also, Jeff had built up a really good business. It's in the electrical, contracting. But we realized that if he had a serious illness or an accident, he couldn't work for any reason, then the family, he would be out of an income. The family would be out of an income. So I helped him create the private sick pay policy, meaning he didn't have to worry and his income was now ring fenced. How? The insurance company would pay a monthly income, in this case to Jeff's company, while Jeff was off, and then the company would pay Jeff as normal. We also established that he had a key member of staff called Dave. The business would really struggle without Dave, and the income and the profits would also be affected. So we set some insurance up for Dave as well. Number one, this is an employee benefit for Dave and his family that the company is now paying for, similar to what we set up for Jeff, life insurance and some income cover. But also we set up a separate policy that protected the business itself and meant the business could keep trading and not lose its profits if Dave died or was off work. Simple. So what happens if Dave is off? Well, like mentioned, he will receive a regular income paid for by the insurance company, but also the business itself is now compensated for the lost profits by Dave being off work. It will also get some money to hire a short-term replacement for Dave if it needs to. In fact, I should have mentioned, if not only do we insure Dave for these events, for the business benefiting, but of course we should insure Jeff for the same as well, because he's actually the main person to the business and attributes more to the profits than even Dave does. Hope that's all making sense. Someone give me a thumbs up or anything in the chat, that'd be really helpful. So I'm just going to produce some stats for you then. I'm not going to go through them. You can read them, but as you see on the screen, you see that some people have life insurance. Some people have it in the UK, but clearly nowhere near enough. And it's a worrying stat, and there's people just walking around taking completely unnecessary risks. The sheer fact that you're on this webinar in the first place tells me that you're already way ahead of the rest of the population. At least you're doing something about it. So well done to you for that. The stats for the income protection are even worse. This policy is the most important policy that anyone should have, including car insurance, home insurance, pet insurance, travel insurance, etc. You can't pay for all these policies without an income. More statistics here, and it's more about what I've been saying about not reviewing it. It's saying that 13 million people are at risk with the wrong level of cover, leaving them vulnerable. So it's just people maybe have got some cover, but not really reviewing it. Another example, how I helped a client. This is Rachel. We protected her income of business and her dad, which a bit different. So let's go through this. I want to stop a second. Is the chat working? Can someone just put a message in there? Or if you can't do it, can you put it in the Q&A and tell me it's not working? I don't know if I set up. Oh, that's probably why. Now is it working? Yes, I think my bad. What an idiot. Never mind. Chat disabled. Right, it's working now. So you've all that time. Never mind. Right, let's move on. So Rachel runs her own business, and she's got a partner, a life partner, not a business partner, but they don't live together. Rachel's dad lives with her. He's retired, and unfortunately, previously he'd suffered a stroke. So he needs a little bit of looking after. He's not too bad. Rachel's got no kids. She's in her mid-40s. Rachel's dad has some pension income, but he's partially dependent on Rachel financially. He could afford maybe food and some of the other bills, but he definitely couldn't afford like a mortgage. So Rachel has got some life cover. I said she's in her mid-40s though. She's got some life cover she actually took out herself from when she was like 18, so it was really cheap then. But she never reviewed it. She's got a mortgage with 24 years left, and her current life cover is only 14 years left. I'll say that. Can anyone spot the shortfall there? She's got a mortgage, and I know the chat's working now. Put it in the chat. She's got a mortgage of 24 years left, but her life cover has only got 14 years left. What's the shortfall? Pop it in the chat if you can spot it. I'll give you a second. 24 years left on the mortgage. The life cover's only got 14. What's wrong with that? No one? Yeah, it's the term isn't long enough. The term of the policy, life insurance policy, is not long enough. The amount of the policy was okay, but it would have expired before the mortgage finished. Well, what's the risk? Well, her dad is living there, and if she dies and there's no life insurance policy, how's he going to pay the mortgage? So what we did, we set up a new one that was specific for the mortgage itself. So what it meant is that if she died, her dad could pay off the mortgage and not be homeless, which was critical. I said to her, look, the other one's so cheap, just keep it anyway. If something does happen to you in the next 14 years, at least your dad has something else to live off as a bonus, if he needed. But the big thing for Rachel, I don't know if you spotted it yourself, was the fact that there was nothing for her if she couldn't work. So what we did was we set one policy to protect her income, and a second policy, she would get a lump sum big enough to clear her mortgage if she had a critical or serious illness, like we said before about cancer. Also, we set up a business policy, so if she got seriously ill, then the business will get a lump sum, so it could hire a replacement for her if needed, and also it will protect its profits while she's off. There's another business policy that protected a business loan that she had, so she could just clear that debt off and not have to worry about keeping up the repayments. Right, last section now. So this is going to talk about how do we do it through your business, how do you make the tax savings? As you can see on the screen, I've split it into two sections. The main thing I want to talk about is what I call the employee benefits. That's even if it's your own company, still classed as an employee of that company. I'm going to look at what you call like the death in service or the life insurance, as we mentioned before, and then the private sick pay. There is another area I'm going to touch on today, which is where some of the clients that I work with is what we call business continuity solutions. What this means you see on the screen is we're going to look at the benefits of the business itself. I've touched on that already with a couple of scenarios, and not just the individual and their family. It's making sure that the business can continue trading, protecting its profits, something called ownership protection, and making sure you insure the debts as well. So going forward, business owners, who's looking after us? We work really hard. We get very little back. We constantly get taxed and penalised, yet we contribute so much. I mentioned before about the furlough scheme. Well, we didn't get a furlough scheme. We got absolutely shafted. We employ millions of workers and we're the backbone of the economy. We don't get enough support, and we're not taught about the various tools and tricks and trade, of the trade that can make life easier for us or save us money. We're kind of just out there on our own, doing it on our own. Everyone's talking about the cost of living crisis. Well, what about the cost of business crisis? Like, who the heck is looking after us? So let me show you how to play the game where, you're always going to win. So the cards are stacked in your favor for a change. Just a quick question. Does anyone on the call actually want to pay more than they need to? Well, of course not. So why aren't you taking advantage of the tax relief available to you? Because there's only two sure things in life, and we all know it. It's death and taxes. So let me teach you how to win on both counts. And obviously, I can't get you to stop death or cheat death, but I can ensure that your family and your business are looked after, that they can benefit if you do, and it can all do it in a tax efficient manner, taking advantage of the legal tax relief that's available to you. So how do you do this? Number one, relevant life plan, or as I like to call it, life cover on expenses, as I mentioned in the title of this workshop. The benefit is life insurance for your family. Company takes it out, and you as the employee or the director of the insured person. By the way, like I mentioned, you can take this out for other employees if you have them. It might be as an employee benefit instead of perhaps paying them more salary. This goes, I mentioned trust before, it goes into what you call a business trust, and the beneficiaries, the people who get the money, is whoever you select, so probably your family. It's paid out tax-free, no inheritance tax due, perfect. How do you save money? Well, let's compare it to a personal policy. We've got two columns there. Ordinary on the left-hand side is personal. So we've got the example here of 1,000. Doesn't matter, it's 1,000 a year, 1,000 a month. It's relevant. On the left-hand side, you pay it personally. You're paying all these extra costs. You've got national insurance, income tax, employers' national insurance. So at the end of it, the net cost is $1,589. So you've got to make $1,589. You've got to earn almost an extra 60% of profit or income to pay the £1,000. Now you might be saying, hang on a minute, Raj, I don't pay myself like that. I'm smart. I pay myself a small salary with a dividend, don't pay all those extra expenses. But, however, you still got to earn more than the £1,000 to pay the £1,000, if that makes sense. However, if you look on the right-hand side, the relevant life plan, the net cost is 810. If you compare it, it's practically half the cost of on the left-hand side. And like I said, your scenario might be a bit less than the 1,600, it might be 13, 14, whatever it is, but it's going to be higher than £1,000, and you're going to make significant savings. How is it £810? Because now the premium comes out the business bank account, and because it's an expense to the company then saves corporation tax at 19%. That's £190. So that even though it shows on your bank statement as 1,000, the true value to you is 810. So, like I said, the actual amount depends on your scenario, but it's an absolute no-brainer. There are a couple of scenarios where you wouldn't do it. Like I was mentioned before, maybe since you took out your policy, you've had some health conditions, meaning you won't be eligible for new cover. That's understandable. But once you've had a meeting with myself, I can go through all this and give you that advice whether to go forward or not. Another thing I must point out is you might think, oh, well, I'll just put my personal policy into my business bank account. You can't do that. And that's breaking the rules. That's illegal. For it to be tax efficient, you must have a relevant life plan, which only myself and a few others in the UK are licensed to advise on. They must be set up correctly to avoid the tax. 64% of business owners have never even heard of it. And only 25% of them have, actually ever implemented it and done anything about it. So you see what I mean about, they don't want you to know. Nobody's shouting out about it. So that is literally what I'm trying to do here today. Who can have it? You've got to be resident in the UK. You must be an employee or a director or both of a limited company. You've got to be receiving an income from that business. You can't have it if you're a sole trader or partner in a business or partner of a member, what I should say, of an LLP. Your staff could have it, but you as the owner couldn't have it. It's mainly for limited company directors. What are the key benefits? Like I said before, it's if you've got staff, it can help improve staff retention. The main thing is obviously taking your the tax saving. You've got the personal cover, personal expenditure. Now you can just move over to the business account. The premiums are not classed as something called a benefit in kind. Like I said, tax saving for the business. Yeah, and the other benefit to it is it can be transferred to your personal name or to another business if you close that business down. So I've talked about income protection. I talked about, or as I call it, the private sick pay. What's executive income protection? This is the equivalent of the relevant life product, but for the private sick pay. This is through the company. Company owns it. Company then pays the benefit out, as in the two examples that I gave. Pays you a monthly income to the business if the insured employee is unable to work through illness or injury. Any reason, physical or mental reason, you cannot do your job. It's not specific like a critical illness policy. The business can then use that money to pay the member of staff, including yourself, if you're the one insured, their personal income. Now, if you think about if you're the only staff member, this is making sure that your personal income that you draw from the business continues to go into your personal bank account to pay your bills and expenses. This is absolutely critical, as I've already said. Cover limits, you can cover up to 80% of your gross pre-tax earnings. This can include your salary. It can include dividends, which is really important. It can also include, like I do, is you pay, if you've got your spouse on there as a shareholder and you pay them dividends, it can include those dividends, because if you're the main one earning the money, if you get ill, well, all the dividends will stop, not just yours. And the insurer recognizes that. And it's just a tax efficient way and they understand all that. So it's not just what you pay yourself. Another massive benefit of the executive income tax policy over a personal one is that if you're making pension contributions or your limited company is making them, you can insure that as well on top. Because what's going to happen if you're off long term, your pension contribution is going to stop. And this allows you to ring fence your pension so that you've got something to fall back on. Let's say absolute worst case scenario, you're off until retirement, but then how on earth are you going to retire without the pension? Also, additionally to that, if you are, depending on how you pay yourself, the national insurance, the employer national, you can insure that as well, which a personal policy you can't. Who can be covered? Same as before, limited company owners, any employee, can't be sole traders and partners or members of LP. Well, that all makes sense. All making sense? Just give us a thumbs up in the chat, please. So I mentioned before about business continuity solutions. Checking the chat's working. Yeah. So what's that all about? So I've gone on about a bit about protecting the profits. One area, it's looking at the key people in your business. It might be just you in the business. That's fine. It might be business partners if you've got them. It might be managers, sales advisors. It might be just someone with a really special set of skills that'd be very difficult to replace if they become ill or to die. What's going to be the knock-on effect on the business profits, and how long will it take the business to recover and potentially replace this person? So what you can do is you can take out the insurance so that the business doesn't lose out on any of its profits. The money can be used for temporary or even potentially permanent replacement, including the costs of hiring. If you think about it, this policy is probably the most important one for a business, because it's a bit like the income protection. The sick pay is the most important personal policy you can take because it pays for everything else. If the business doesn't make any money or the business stops trading because it goes bust, then how are you going to actually pay for all your other policies, like your relevant life, like your executive income protection anyway, which is, they're all kind of for a personal benefit. you need the business to be open and trading for them to pay those claims out. The other reason is we're in business to make a profit, so it makes complete sense to protect it. And this is really important if it's just yourself. A lot of business out there, just yourself, one person. It's really important to have something like this in place. Another one is called ownership protection. This is actually only for if you've got business partners. If, like myself, I've got my wife on there as an owner of the company, but if I died, I just want the shares to go to her and vice versa. That's fine. It's set up. Don't need it. But if you've got a business partner who's not your other half, or not the person who you want your shares to go to if you die, then where's the money going to come from to give your family the value of your shares if you die? Hopefully your business is worth something, and I'm sure you'd want your family to get full value for those shares. So either they're going to have to come in, your family member or the next of kin, whoever, is going to have to come in and run the business, which is very unlikely if they've got no experience in it. The surviving business partner or partners are probably not going to want to deal with them, and vice versa. How on earth is that going to work? Usually the easiest way and simplest way is that the business just buys the shares off the family, and it can, everyone can walk away from it. But what if the business doesn't have the money? It either means that your family's not going to get full value for the shares, they might not get any money, or the business is going to have to go bust, are going to have to take on a lot of debt in purchasing these shares. Even if it had a load of money in the bank, it can afford it, it's going to have to potentially drain the bank account. Might not want to do that. Simple solution is just set up a life insurance policy that would pay out the sum required. It's a very cost-effective solution. And it can also include if one of the shareholders had to leave the business due to long-term illness. Another area is just like you'd insure personal debts, like you insure your mortgage for dying or for becoming ill. I think it's really important to cover the company debts as well, and that includes directors' loans. Directors' loans, just so you're aware, need to be repaid immediately on death. If you've got business partners, this is really important, because if they die, the business is going to again have to come up with the money to pay back the loans that they've given the company in the past. And appreciate on that front and on the ownership protection, you say, well, hang on, how much is the business worth and how much is these loans worth? It's a constant moving target, but this is why you review it on a regular basis. Hopefully all that has made sense. Hopefully you've got some value from that. Hope you've enjoyed it as best as you can. Hopefully I've been clear. Sorry about the chat earlier on. So going forward, what's available to you? What is the opportunity? Quite simple, really. Get yourself booked in for an appointment with myself. I'm offering one-to-one appointments. Discuss your personal and business needs. You're going to get bespoke advice, and I'll help you build and design your own portfolio, and like I said, review your existing ones if you've got cover. Just as a reminder, what you're going to get, you can get the cover in place that you've been meaning to do if you haven't done so already. You get to reap the tax benefits of running it through your business. You get to provide you and your loved ones with a peace of mind. You get to protect the business you worked so hard to build. You get to make sure it's structured correctly and put into trust, or the correct trust. What does it cost you? Absolutely nothing. And that's not just the initial appointment, that's all the way through. I mean, why are you doing this for free, Raj? I'm not doing it for free. In our industry, we will get compensated by the insurer if and only if you take out a policy, but it's at no detriment to you. You're not paying more for it than if you went direct. A lot of time you can't get it direct. So you're getting the best prices possible, but most importantly, you're getting the best advice, and that's it. It's that simple. So how do you book an appointment? You get your phones out and scan the QR code there. That'll take you direct to my diary, and you can book an appointment. If you just bear with me a second, I will also... Just 1 second. We'll come to Q&A in a second. Sorry, I think I've stopped the screen sharing now, haven't I? We'll also put the link in the chat. Sorry, I should have had that ready. Right, where were we? Were anyone able to get that screen? Let's go bring it up again. 1 second. I'll pop in the chat anyway, the link. Everyone see that? I'll sort that out. But in the meantime, is there any questions? Got one here from Peter. Does the business continuity pay out on the insolvency of the company? Yeah, I've never been asked that before. I'll double check, but it's payable. It's paying out on the event. So whether it's death or if you're covered for like the critical illness, the cancer, then they have to pay. As long as the business is still open to receive it, then technically I think so. I will double check and find that out. But yes, I think so. Does that answer your question? Sorry, guys. I'm just going to put that other screen back up for those that need it. Right. Any other questions, guys? Should be able to see instead of me now. Should be able to get that QR code back up. No other questions? I'll hang on for a minute or so. Well, if not, thank you very much for those that attended. Hope you've got some value from that. I'm only going to do 3 of them. Sorry, I should have said at one point. I'm only going to do for 5 appointments, and I can see that 4 of them have gone already. So if you do want an appointment, please get that booked in as soon as possible, as soon as you possibly can. And yeah, thank you very much. Thanks for attending, and hope you all have a lovely day.